Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. Today is Thursday, April 23rd, 2020. We again find ourselves in the final hour of the trading day. In my opinion, and what works best for me, are generally making the majority of my buying and selling decisions at the end of the day. And the reason that I think this is important is that during the day you have the algorithms and the day traders. They are the one controlling the pricing. At the end of the day, you have the large financial institutions coming in. They deal with the most money. They have very smart people. They have a best technology. They have very good information. And at the end of the day, they take the control of the pricing away from the day traders with their size. And so I like to piggyback and make my buying and selling decisions based upon what the large financial institutions are doing at the end of the day. That being said, I have had a few day trades today. I will show you those when we start looking at my current positions. But anyway, thank you so much for coming today. I always look forward to seeing everybody. It's always nice to have you here. We have such great people in the chat. I think we have such a great group, good information, good comments, good poems, and just a good community. So thank you so much for being here every day. I appreciate you spending your time here, and I hope you're getting some kind of return on your time investment, and that this channel is helping learn some good trading and investing principles. So let's take a look. Kamal is here. Good to see you, Kamal. And yes, I am looking forward to what we discussed, doing a video with you to take a look at what you've developed. Mohammed is here. Hi, Mohammed. Good to see you, my friend. Mohammed says, hi, Greg. Hi, fellow traders. Hello. Sanjiv Patel. Hello. Nice to see you. Appreciate you coming by. Yeah, it seems like it's the first time here, but thank you very much for coming by. And if there's anything I can help you with, you please let me know. Hi, Zach. Good to see you. Quad Racer. Happy Thursday. I spoke with Quad Racer last night, so that was good to put a face with the name, and I enjoyed that. Thanks a lot. Miko25. Hello, Miko. Good to see you. Looking forward to our lesson tonight at 6:30, right? Yeah, 6:30. Scotty13 is here. Hello. Good to see you. MA is here. Tweet the day trade. Oh, well, I'm not going to tweet it, but I'll show you here as soon as I go through the positions. David is here from Colorado. Good to see you, David. Always nice to have you here. Thank you. And Dan is here. Thank you, Dan. Good to see you. So, wow, kind of a crazy day today. We were up big and then we went negative. There was some news about, I think, Gilead's vaccine maybe not having good results. Man, I was looking, and then the next thing I looked at the screen, it was like down big. I was like, what just happened? And then it rallied back. So that's good. So the Dow is currently up 205 points, up 0.88%. NASDAQ is up 61 points, up 0.72%, and the S&P is up 0.66%. So the winner today is the Dow Jones. All right, well, this is what we're going to do. This is a plan for today. First of all, we're going to run the U.S. legal disclaimer. I'm going to come back after that. Going to take a look at my current positions, talk about when I bought them, why I bought them, what methodology, what strategy I used to enter the trade, and how I'm going to manage these trades going forward. As I mentioned, I did have 3 day trades today, and I will share those with you as well. After that, some of you have been kind enough to share your trades with me, and I will be going through those as well. After that, I always like to spend a few minutes talking about trader psychology or good trading words of wisdom. It's important to learn how to trade. It is very important, and you have to have a pretty good trading plan, but following that plan is a whole lot different than creating it. And if any of you have been out there trading for a while, you probably know what I mean. So there's 2 components to making money at trading: developing a good plan and then sticking with that plan. That's just as important. It's just like losing weight. We all can create a plan. I'm going to exercise more. I'm going to eat better food. But sticking with that plan is sometimes hard. The plan would work. We know the plan would work, and the plan will work for trading if you follow it. But Following, it's a whole different thing because we get our emotions involved. We get our emotions all amplified with the gains and the losses, and gets us out of our groove. So my best advice to anyone, if you're having a hard time following your plan, reduce your position size. That will reduce your emotions, and then you have a much better chance of following your plan. After that, we're going to go down through my watch list one by one and see if there's any, if I have any potential setups at the end of the day. I have 3 requirements before I will enter a trade. First of all, and regardless on the time frame, by the way, first requirement is that it has to have a confluence or a combination of indicators lining up, like MACD, RSI, moving averages, ATR channels. I look at each indicator as a potential group of buyers. And so you're going to put yourself in the position to have a much better chance to have a profitable trade if you're in the company with as many other buyers as possible. So if I look at each indicator as a group of buyers and they all line up, on the daily chart, or ideally on the weekly chart at the same time, then I have buyers, groups of buyers on the daily, groups of buyers on the weekly. And again, just because you're in the company with a ton of buyers doesn't mean you're going to have a profitable trade, but it increases your chances. So combination or confluence of indicators lining up, or another way to say it, combination or confluence of different groups of buyers lining up. That is requirement number 1. Requirement number 2, you have to make sure that you have a good risk to reward. I want to make sure I can make at least 2 times what I'm risking based upon valid resistance above me and valid support below me. I may have a good combination of indicators lining up, but based upon my filters, it may be too high on an RSI reading. It may be too high on a ATR reading. And so the indicators are there, the confluence of indicators are there, but the risk to reward may not make sense. So that's requirement number 2. Requirement number 3, make sure that you have a variety of different type of stocks. You don't have all of your positions in tech or all your positions in auto. You want to diversify, not put all your eggs in one basket. And then lastly, make sure you take a look at your account heat. You do not want to have, at least for me, I don't want to ever have more than 60% of my capital at risk at any one time. And that's just a rule that's worked for me. And this year, it has saved tens of thousands of dollars just having that one particular rule. So those are the requirements. I'll go through the watch list. If anything looks good upon first pass, I'll go ahead and check it. And then at the end of the day, I'll take the candidates that I check marked and I'll go through them and I'll try to narrow them down, ideally down to one trade, to the one best trade that has the best indicators, the best risk to reward, keeping in mind correlation and account heat, looking at different time frames. And then if there's something, I'll go ahead and place the trade right at the end of the day. If there's something. If there's not, I won't take anything, right? And then after the market closes, if anybody has any questions for me, I'm happy to answer them for you. I'll do my best to clarify anything that maybe was not clear. If you'd like me to take a look at some stock symbols, I'm happy to do that. I'm happy to give you my humble opinion on that. And then if there's any symbols that you would like me to take a look at before the market closes, if you feel like it'd be important for you to get my take on it, or maybe potentially for the group, please just type them in, but please put a star by it so that I know it is time sensitive, and I'll do my very best to get to it before the close of the day. So, all right, that is the plan. And if you could be so kind, hold tight for about 40 seconds and I'll be right back. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, all right. Hey, Marco is here. Good to see you, Marco. Hope you're having a good evening, my friend, all the way from Slovenia. Appreciate you spending your time here. If there's anything I can help you with, please let me know. Frank is here. Hey, Frank, good to see you. Appreciate you being here. Frank also says, I did sell Nike at 89.46 for a small gain. Okay, good for you because it did kind of reverse track a little bit. So when I go through the positions that the group has, I will take you off of the Nike trade that you got in yesterday. But congratulations on having a small gain on that at least. All right, well, let's start off here. All right. So I've been in this trade for 4 days. I did buy Adobe back on April 17th when the 10 crossed over the 50 EMA. This is a good back-tested approach. Doesn't work every trade, but the structure of these crossover trades is they get you out fairly quickly if you're wrong, and they give you the potential to ride a big winner, and that's the key to profitable trading. Large wins, small wins, break-even trades are fine, and small losses. That's the equation, but you just can't let things turn into big losses. So I did buy it here, 344.17, went sideways. Next day, it just plunged down on me, but my stop on this is what I call a 50-50. 50-50 means I will get out of half of the position if it closes below both of the moving averages that I used for the crossover. You can see intraday it tested it, but it did not, so I held on to the position. Yesterday had a nice day up, hit some profit targets. Today is up a little bit, but still underwater on the trade, but happy to have this up. And again, as long as the price stays above the 10 and the 50, I will hold it. If the price closes below both the 10 and the 50, I will get out of half. If then the 10 crosses under the 50, I will get out of the second half. Or if I hit my emergency stop down here, that trumps everything, and I will have to get out. And I always put an emergency stop on a trade. Most of the time, large majority of the time, I don't hit it. I'll go with an end of day stop or what my trading plan was, but I always want to have an emergency stop down here just in case the bottom falls out. And what I do is I take what my maximum loss is on any one trade. So, let's say I have $100,000 in my account. Let's say I'm risking 1%. Okay, that's $1,000. I would divide into it the value of the 2 ATR. That will tell me how many shares to buy. And what I really like about this is it accounts for volatility. As volatility increases, then this number gets larger and my share size gets smaller. If volatility decreases, this number gets smaller and my position size gets larger. So it's really good. It's really black and white, and it accounts for a lot of different things. And by the way, I do have a video that I did on this position sizing with the 2 ATR. It's on my YouTube channel, so if you'd like to, I think it's about 25 minutes, something like that. And if you'd like more information, it's on my YouTube channel. It talks about position sizing in relationship to volatility. So anyway, glad this is up today. Still slightly down on the trade, but that's how it goes, right? Apple. Well, I'll show you first of all. I have long-term calls on Apple. I did buy long-term calls expiring June 18th, 2021 on Apple, $250. Bottom back here during this week when we had this big V1 rejection of the third ATR channel. Has moved up nicely. They're nicely in the money, both intrinsically and dollar-wise. So my stop on this is going to be a close below halfway of this washout bar. I would go ahead and just lock in a loss if it gets back down there. If we reject the 1 ATR channel up here on the weekly, I would also get out here and lock in my gains. If it closed above, I'd keep it as long as it closed above, and then I'd look for additional resistance above. So anyway, this trade is working out nicely. Apple is up a little bit, up $1.12 today. I had some really good trades on Apple today, I gotta show you. And I put on a short position, if you can believe it. This was my short position right here. This is when the news of Gilead came out and we went down. We recovered very quickly, but I was a little suspicious that we get back up to new highs after this monster amount of volume to the downside. I did short here on this 5-minute bar. You can see we have a V1. Here's day one. Day two washes out day one, close below day one's close. So there's a V1. It's also a bearish engulfing bar, and it also lost the 50 RSI. So I did short here, 278.59. Moved down nicely, kept going down, then it closed back above the 100-day moving average. So I decided just to go ahead and lock in my short there. But for 10 minutes, it was pretty good. 278.59, and I covered at 277.46. So I made a little over $1, which was nice for 10 minutes. Then I thought I was really smart because it started going back up, and then it went down. I was like, oh, well, anyway, still be happy for the gain. Then I went ahead and went long here. And as you know, a lot of my students, if we were doing chart simulation, they would see why I bought this. We went below 30, back over 30 on the RSI. We had a V1. Here's day one. Here's day two. Day two washed out day one, closed above day one's close. So we have under 30, over 30 in a V1, and we also had a false breakout to the downside of this previous range. So I bought here at 276.08, moved up nicely, and then I got out here when it rejected the 50 RSI. It went above the 50 and closed below. So I got in there at 276.08 and got out at 277.26. So that one was all over $1 as well. So I made $1 to the downside and $1 to the upside. And then I thought I was smart because it went down and then it went up. I was like, oh shoot, but it's okay. I was very, very happy to make $2 total in the up and down. And now we are back in the value zone. So if I was looking to day trade this again, I would, now that we're back in the value zone, I need to see this move sideways, look for a V1 or V2, but doesn't look like it's doing that right now. So good trades on Apple. SPY. All right. I know everybody gets tired of me talking about this, and trust me, I do too. But in case we have some new viewers, I really want them to understand why I do this. I do buy the SPY every single day at the close. I hold it overnight, I take the risk, and I sell it first thing the next morning. I do this based not on technicals, but just from a long-term back-tested study, excuse me, of doing this. This is from Lizanne Saunders at Bespoke Invest. She's Chief Financial Officer, I believe, or Investment Officer over at Charles Schwab. This back test tested two approaches. Approach number one, and every day since 1993. Approach number one, buy the SPY at the open, hold through the day, sell it at the close. If you did this approach every day on the SPY since 1993, you'd have returned a negative 13.9%. However, if you did the opposite, which is what I do, buy the SPY at the close instead of the open, buy the SPY at the close, hold overnight, take that overnight risk, sell the first thing the next morning, you'd have made 634.2% return. Past performance is no guarantee of future results. And we should all know that because nothing is guaranteed in trading. But over time, you can see the buy in the evening, hold overnight, sell in the morning is rocky road. But over time, it has had a nice return. The buy in the morning, hold through the day, sell in the afternoon has not done so well. So it doesn't mean this is going to continue to work. It has worked for a long time, for 27 years. But it doesn't mean it's going to work in the future. And there are big ups and downs. But you know, this is a long-term approach, just like any kind of investing. There's ups and downs, right? But this is up and down with an upward drift. So, you know, it's very important to position size conservatively so that you can take the long view on this trade. So that being said, I did buy the SPY here yesterday at the close, 279.10, and sold it this morning at 280.46. So over $1 just for the overnight SPY trade. So anyway, so far so good. All those trades worked well. I do have one losing trade here that I did intraday, but it wasn't too bad. And this was on, oh boy, this was on USO. You know, when I look for a return to value, I want to see the price going up, then return to value, the values in between the green lines, and then go sideways. So I was watching this. I didn't take this V2 because it rejected the 100-day. And so I waited. And then this is the trade that I took right here. Here's the V2, day one, bar one, bar two, bar three, bar one washes out bar one, and then three closes above. My stop is a halfway of the washout bar, and moved up, moved up and down, and then this bar here I got out because it closed halfway below this. So I got in at 277 and I got out at 275. So I lost 2 cents on the trade, not too bad. But then look what happened. Boy, am I glad that I got out, right? And I've mentioned this before, but whenever you get really sideways motions, people are just not sure if it's going up or down. The more it goes sideways, the more it consolidates, the more it is going to break one way or the other. That's why I took the trade here, because I was hoping it would be to the upside. But at least I got out here when I was supposed to before missing the big plunge down. So only lost 2 cents on that one. So all in all, really good day. Positive, profitable day on everything between the day trades and the normal regular trades. There haven't been a lot of positions for me to get into on my normal swing trades, and so I have been having to look intraday for trades a little bit more recently. All right, let's take a look here. Bing He had a trade on TLT. He bought it back on the 17th, I believe. He bought it because the previous day closed above the 1 ATR channel and probably above this range. He bought it at 168.80, moved sideways, had a nice day a couple days ago, came back down, up a touch today, but Bing He is profitable on the trade. So congratulations so far, Bing He. And then Steve Burns. All right, so Steve Burns did take a trade yesterday on the QQQ or the QLD, which is the double leveraged Qs, NASDAQ 100, but it's double leveraged. He bought when we had a 1050 EMA crossover. This is a good back tested approach to trading the Qs or QLD. Of course, every crossover does not win, right? It does not win. But again, the structure of the crossover is that you can have potential for a big win, and it usually gets you out pretty quickly if you're wrong. So Steve did buy it here yesterday at 109.38. Was up nicely earlier, but now it's reversed, and currently it's 108.57. I like these crossover trades. I myself did not take this trade because the entry happened over the second ATR channel, and that's just a filter that I have. And my thinking there is that 92% of prices get rejected at the third ATR channel. So when I look at this, I'm like, most likely it's going to stall out here, so I don't know if it gives me a good risk to reward ratio. Sometimes I'm right, sometimes I wish I would have taken them. It's just how it is, but just come up with your own program and stick to it. So anyway, pretty close to break even on the trade. And then Nike, so same crossover here. Both Steve Burns and Frank took this. This is on Nike, the 10 EMA crossing over the 50 EMA. I'm not exactly sure what Frank bought it at. Steve bought it at 88.20. He sold it today earlier. He told me at 89.46, so that's good. So we made a small profit on that. And currently it's at 87.47, down about 1.46%. So anyway, down a little bit on this trade here. So that looks like it's it. I think we have Amazon earnings coming out today. Hey, we have a gain. We have a poem from Frank. Thank you so much, Frank. I always appreciate the work you put into these. Let's take a look. The market never sleeps. Not so much for traders. Our pockets are not that deep. So take your time and you will find a trade that treats you fine. No hurry, don't fear, the market will be here. Yes, so true. Let me read that again. The market never sleeps. Not so much for traders. Our pockets are not that deep. So you take your time and you will find a trade that treats you fine. No hurry. Do not fear. The market will be here. Man, Frank is just so good. I mean, I'm super impressed that anybody could write a poem, but I guess I'm easily impressed that way. But it's not just that. It's just how pertinent the information and how true these poems are, Frank. I mean, my gosh. Thank you, sir. Hey, Zach, good to see you. Hello, Greg and friends. Sanjeev says, looks like for the first time it's following buying at open and selling at close. Market makes sense. Well, you know, it makes sense sometimes and it doesn't make sense the other time. Just in the long run, it has been proven that that is a good approach. In March, it was horrible. It was the most horrible thing ever. But in April, it's gone back to being a pretty good approach. Bastian, hey, good to see you. That's Marco's cousin. Nice to have you from Slovenia. I don't know what's going on with my voice today. Sanjeev says, it won't let me post the article here. I emailed you. Okay, thank you, sir. Bing He, good to see you, my friend. Hello to Bing He in, oh my gosh, I'm spacing on where Bing He's from. Singapore. Jeez, come on, Greg. All right. All right, let's see what's happening over here. All right, so a little earlier I talked about that I like to spend a few minutes every day talking about some good trading psychology quotes, some good trading words of wisdom quotes, and there are a lot of good people on Twitter, traders on Twitter and Facebook that spend the time to make these posts, and they're full of wisdom. They really are on all sorts of different topics, and one of my very favorite is Thomas Paine at Trader T Paine on Twitter. Thomas was a scientist that changed careers and became a trader. So he uses a lot of his kind of scientific method and he brought that towards trading and incorporates that in trading. But Thomas always has really good sayings, and let's read through here and take a look. Thomas says 99% of the time you'll either sell too early or too late. So will the best traders of all time. There is no need to catch every tick of a move. Did Jordan get upset if he didn't make every shot in a game? You don't have to be perfect. You just have to win more than you lose. And, you know, this is true. This first little paragraph, 99% of the time you'll either sell too early or too late. So will the best traders of all time. There is no need to catch every tick of a move. And, you know, I know some traders that could have a great trade, but because they just didn't get the very top, they're all put out about it. And, I mean, that's ridiculous, right? I mean, I can think of one or two times that I've really caught like the bottom of a market. Well, I guess more than that, but pretty close. It's very hard. And you know, to sell the very top, the very tick of the market, it's like impossible, right? You just want to make the meat of the move. So like he says, there's no need to catch every tick of a move. Did Jordan get upset because he didn't make every shot? No, of course not, right? One of the best basketball players in the world. He didn't make every shot either. He didn't get the top of every trade either, but he still ended up doing pretty well. You don't have to be perfect. You just have to win more than you lose. And that's true. But I might add another caveat in there. You know, your wins have to be big and your losses have to be small. You can win more than you lose, right? Percentage wise, but you can lose more than when you win even on the small trades that you lose. So anyway, thank you, Thomas. I appreciate that and hope this was helpful, but don't worry about that you didn't get the bottom and you didn't sell the top. Just be happy that you got the kind of the meat in the middle. Hey, Steve Burns. Good to see you, my friend. Always an honor and a privilege to have the great Steve Burns here. Thank you for everything that you do with your great posts on Twitter, your great website, newtraderu.com, all your great courses. And thanks for being my teacher and mentor over the years, Steve. I've learned so much and I owe a lot to you. So hope you're having a good day, my friend. Frank says the market volume not so hot of late. Well, it did kick up a bit today so far, but yeah, it has dropped off down there. You're right, Frank. MA says MA. Ooh, how about that? You know, I was looking at this earlier because earlier in the day we did have the 5 crossing over the 20. Right now it looks like it's untriggered. It backtests okay. It's profitable, but not super profitable. So I was going to consider buying this if it did cross over, but right now it is not crossing over, and we're working on doing a V1 to the downside. And we have rejected the 50 RSI, which is also not a good sign. So yeah, we had that higher low V2 yesterday. Day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1, but it had this big cap, which does not let me take the trades. So yeah, I just personally on MasterCard, I don't see anything right now, MA. Oh, Amazon earnings on 4:30. Well, thank you for letting me know, because you can see on my charts here, it shows 423. You see the little E down here? So it's not today. Okay. Steve says, let's check out the Beyond Meat chart. Let's do it. Oh my. My gosh. It's insane. Wow, what a day. Up 12.64%. You know, whenever I see something like this, I'm like, okay, could I have bought it anywhere? I guess here with the under 30, over 30 would have been a possibility. Would have looked for a higher low here, but I didn't get one. Here's a 520 crossover. This certainly would have worked. I'm not sure if the 520 crossover backtests well, though, or not. But regardless, this crossover would have worked really well. By the way, had I been in this trade, and I wish I was, I would be carefully watching the RSI level right now. If it closed below the 70 RSI, if it went above the 70, couldn't find any more buyers up there, and it closed back below, I would lock in profits here. What do I think of buying Amazon right now? Well, you know, it's hard to argue with Amazon's performance, but, you know, I have certain filters. I have certain requirements for me to take a trade. Depending on the kind of the trade, I don't like to buy it higher than the second ATR channel because, you know, up here, here's the third ATR channel. 92% of prices fail here. Doesn't mean they can't go higher, and this proves the point. They did go higher. But for me to buy here, yeah, I don't think I would buy. I mean, I think there's a good chance we will pull back into the value zone. And if, you know, if you're buying it for long term, you know, I'd much rather buy it at the value zone than up here. So, you know, for long term, who knows? This thing might be $3,000 in a year. But from a trading standpoint, no. Okay, call options. Well, you could. I mean, the nice thing about call options is that you have a defined risk. You know, we have earnings coming up. There's probably a lot of volatility baked into the earnings, so the options are going to be fairly expensive. I think after earnings come out, a lot of the volatility will come out, and maybe those call options will be cheaper. Frank says, lately the market makes me nervous, being he. I call it hot potato syndrome. That's interesting, Frank. I have a new student from South Africa. His name is Kyle, and he used the exact same terminology yesterday. Interesting. Steve says the 520 cross does backtest well and Beyond Meat. Well, shoot. Well, here's one of those situations, though, where sometimes it works for me and works against me. Here you have the 5. Well, let's see where the 520 take place. Oh, yeah, it happened here. Would have been fine to take. Shoot. Yeah, it happened there on that day. Well, well, wow. That would have been a good trade. MA says TVIX. I don't really. Well, we are working on a higher low V1 here. As a matter of fact, I was looking at the regular VIX today for the same trade. But yeah, I mean, here below the value zone, we come into the value zone, we go down. Today we went down, reversed back up. But it would have to close above yesterday's close. But I do like that it rejected the 50. Let's look over here at VIX, normal VIX. And you can see I have the line drawn there for that exact same reason. Same chart, because they're pretty much the same thing. But under the 1 ATR channel, above, down, down. And we had a new group of buyers come in today. They didn't like the prices down here, reverse back up. So I am considering buying the VIX if we can close above 44.15 with a higher low V1. So that is what I'm considering today. Zoom broke to new highs. Wow. Oh, yes it did. Wow, wow, wow. Yeah, I look back on this chart here and I was like, well, where could I have bought this? Maybe here, 520 crossover. I don't know if Zoom backtests well on 520 crossover, but that would have been a nice place to buy it right in the value zone. And boy, would that have worked out pretty well. Pretty well. Hey, Jesse, what's going on, my friend? Oh, man, good to see Jesse. Jesse's a former student of mine, just class A guy. Great guy. Thanks for coming, Jesse. If you were stock, I'd buy you, buddy. Hope you're doing well, keeping safe. Bing He says, Steve Burns, there is only 2 closed trades on the 520 crossover for Beyond Meat so far. Is that valid for backtesting? I would imagine Steve would say, the more backtesting, the better sample size, the better. All right, let me take a look over here. So what is the market doing? Oh, well, all right. Well, I guess it was good I got out of Apple when I got out of Apple. So Apple is really, are we still green? Yeah, NASDAQ is barely green, but this is a big rejection bar. Let me get rid of all these. Let me get rid of these day traded things so we can take a look a little better. All right. Yeah, Apple's getting close to having a V1 to the downside, a lower high V1 to the downside. Let's see, where is the, yeah, right there. So pretty close to a V1, a lower high V1 to the downside. That could potentially be bearish. Doesn't mean it is for sure, but it's not a good sign, right? I mean, it's not a good sign that we went up and then reversed back down. Jesse says, thanks, Greg. You're too kind. I mean it, buddy. I mean it. All right. So Adobe went negative. Still in that with the 1050 EMA crossover. Doesn't look like any changes there. Apple had the day trades, but again, my main position in Apple are the long-term options that I have, the calls. SPY is below where I sold it now, so it looks like I will be buying it at a little cheaper price. And then USO, I just had that day trade in. All right. Steve says, not much data on Beyond Meat, but the 520 crossover backtests well on most momentum charts historically, so it is a valid signal in itself, and also since Beyond Meat has IPO'd. Oh, great. Thank you, Steve. Great comment. All right, so TLT, Bing He, is still up on the trade. QLD is slightly down, and Nike is also down. All right, so listen, I'm going to go through the watch list. I like to show this. It's kind of fun. It's kind of dumb, but it's kind of fun also. Just to remind myself and remind everybody else out there, if you're going to place a trade today, choose wisely today by Diana Cooper. Choose wisely today. Make sure you have, good confluence of signals lining up. Make sure you have a good risk to reward ratio. Make sure you have some diversification in your in the holdings that you have. So anyway, thanks Diana Cooper, and thanks for reminding me and everyone else to choose wisely today. Sanju says, do you have long-term naked calls on Apple? Yeah, they're just long-term calls. Yeah. I didn't sell the calls, I bought the calls. So defined risk. So yes, I do. Or spreads. Nope, just calls. Zach says, how do you feel about stocks that have massive amounts of shorts placed on it but not getting lower? GME has been put on the list of short restrictions. I forgot the name of the list, but holding. You know, Zach, when I studied with Dr. Alexander Elder, I mean, as you know, he likes double bottoms with bullish divergences. And he does like to look and see what the short position is. And if it does have a large short position, he does like to buy it. You know, because shorts means that you have built-in buyers, right? Shorts have to buy to get out of their position. So that is one indicator that he kind of uses. He looks for the setup and then he checks and goes, oh, does this stock have a high short position? If it does, he likes to trade even better. Looking at CME, well, we're above the 1 ATR channel. We came into the value zone. We have stopped going down and have a couple days sideways. So, you know, this is starting to set up for something that I would look for. But the setup's there, but the trigger's not there. And the trigger would be a V1 or a V2 entry for me. All right. Well, let's start going down the list and see what's happening. Apple. Okay, well, we talked about that. Did have some trades in Apple today. No new position for me today in Apple. Other than the calls, I just really don't see anything here that would make sense. I don't know why I can't get rid of that line. There we go. Yeah, I don't see anything on Apple. Adobe I have, slightly positive, so good for that. Amazon, so the earnings are on the 30th, huh? I was all excited for Amazon earnings today. But, you know, we had this huge move up. We've just been moving sideways now, making this higher range up here. For me to get interested in Apple, I need a big pullback before I would get interested. Boeing. It's up a little bit today. It does have a V2, but the washout bar does not wash out day one very well. Had a little gap here, rejected the 10-day moving average. MACD's positive. I just, you know, this to me would not be an A trade. You know, this would be like a B- trade. Berkshire Hathaway, we were above the value zone, came into the value zone 2 days sideways here. If we had a V1 or a V2 tomorrow, might be interesting. Beyond Meat, we looked at that. If I was in this, I'd be watching that 70 RSI. If it closed above 70, I'd keep it. And if it closed below, I would get out. Caterpillar. Don't see anything on Cat. Carnival Cruise, you know, here, look, we're below the 1 ATR channel. We come into the value zone. We have a lot of sideways motion. I can tell you that. We do have a V2 today, but I don't see that the day 2 bar washed out the day 1 bar by a quarter ATR. I think, you know, here's half, here's a quarter. It didn't, I think it washed it out by about an eighth. You know, I've been struggling with this one all day. I mean, you know, it is a nice higher low V1. We closed below the 1 ATR channel, came into the value zone. We have lots of sideways motion, and we know what sideways motion is doing, right? We know it's going to eventually break one way or the other, either upside or downside. It is a V2. It's just not like a really great V2. I'll keep it on there and circle back after. Dow Jones, don't see anything there. Disney does have a V1 today. I don't like that it rejected the 50 RSI already today. So I am going to pass on Disney. Earlier in the day, it had a 520 crossover and it had a nice V1 and we were above the moving averages. But at this point, it's gotten weaker. So I'm going to let that one go. How are we doing on time? Good. Etsy, it's just been a monster, but it's finally starting to go sideways here. Facebook, big strong day off of its highs. I don't see anything there. Gold, another strong day for gold. Boy, it came down into the value zone and took right back off, didn't it? Google, don't see anything on Google. We've rejected the 200-day now twice in a row. I did buy Google back here when we had the 520 crossover. Moved sideways, came up here, rejected the 200-day moving average. I took half of it off. Then it went up a little bit more, closed back below with the 200 again, and I locked in profits there. Next day it went right down. I was like, oh, sweet. And then it went right back up. So nothing here. I need to see a pullback into the value zone. Goldman Sachs closed above the 1 ATR channel. It's getting close to coming back into the value zone. So if it can come back into the value zone, go sideways, I would look for a trigger there. Home Depot had a nice 3-4 days, but this has just been a chop fest, just going sideways. IBB up a bit today. Steve had a nice trade on IBB. Got out, I think here, went a little higher, but he got the meat of it. That's what I was talking about before, right? You're never going to get the very, very top. Intel, don't see anything on Intel. IWM up pretty strong today, up 2%. Don't see anything there. J&J, very strong. I would need a pullback into value. CarMax, pull back into value. Coca-Cola is back into value. Came in, went down. Now we've had 2 days of sidewards motion from this bar here. And if I could get a V1 or a V2 on Coca-Cola, that's where I would be interested in buying. So not today, but potentially in the future. Lockheed Martin, just been dancing around that 200-day moving average, so I don't see anything there. MasterCard we talked about. McDonald's just moving sideways. Need a pullback before I can get interested. A lot of these stocks, I just need a pullback. Here's Merck. We did come into the value zone. But now that we're in the value zone, I'd need a V1 or a V2 entry. Microsoft is down today. I would like to buy Microsoft right down here in the value zone. You know, in the value zone, sideways motion, maybe a rejection of the 50-day moving average or the 100-day moving average with the V1, V2, that'd be pretty sweet. So, you know, look at trades, look at where they're at. They may not be where you want them to be, but think in your mind, okay, if they do get down there, that would be a good setup. Netflix up a little bit today. Need to pull back into value. Nike, we talked about that, down 96 cents. Philip Morris. Well, look, Philip Morris was in the value or above the value zone, came into the value zone. Now we have 2 days of sidewards motion here. So if I would definitely take this tomorrow. If tomorrow we went down and reversed back above, that would be a picture perfect return to value with the V1 or V2 trigger. So nothing today, but I'll be watching that in the future. PayPal off of its highs today. Looks like it's having problems with the 3rd ATR channel. Q's up slightly. Need a pull back into value or a bounce or a close under and close back over the 200. Silver came right into the value zone and bounced right there. Didn't offer a time for a trade, but if the 5 crosses under the 20 and back over, I would take that. SPY. Of course, had the nice little overnight SPY trade. Going to be buying that again today. Teladoc, big strong day. Ooh, boy, when I saw this big, huge reversal bar, this surprises me that it made it back up against that big bar. TLT, being he's doing well there. Tesla moved up higher. Now we're starting to stall out. We've lost the 3rd ATR channel. Pull back into values what I'd be looking for. Twitter down today, V1 to the downside. UAL, I was looking for a higher low V2 today. Here's day 1, day 2 washes out day 1. Today would have been great if we would have closed above day 1's close, but it doesn't look like it's going to do it. UNG, it's had a big strong day with all this oil craziness, is starting to poke its head back in the value zone. So if we can get in the value zone, move sideways, I would look for a trade there. UNH, strong to extended. Oil had that small little loss today on the 5-minute bar there. Is starting to consolidate a little bit. VIX, I do like this, but I don't know if it's going to trigger. It would have to close above 44.15 in order for me to be interested. Verizon, just moving sidewards. Walgreens, don't see anything there. Walmart had a big run, but looking for that dip, XLE, I don't see anything there. Financials back in the value zone, moving sideways. Could look for a V1 or V2. Real estate poking its head in the value zone, but no setup yet. Utilities, no setup. Healthcare, need to pull back into the value zone, maybe a bounce at the 200. And Zoom, we talked about, man, Zoom is just zooming away, right? Tesla, so I just talked about Tesla. You know, we moved up very strong, had this sidewards motion, but for me to get interested in Tesla, MA, back into the value zone. The value zone's between this green line and this green line. So anywhere in here is considered the value zone. But I consider any prices above the 1 ATR channel to be overvalued. I want to buy at value, sell overvalued, or I want to buy undervalue and sell at value. So I would still consider this overvalued. Don't read too much into that statement, right? You know, but from a technical standpoint, I consider it overvalued. The company may be perfectly valued, right? But from a chart standpoint, that's what I consider extended. You know, I want to pull back to the mean. Okay, so are there any potentials for me today? Well, Carnival Cruise does have a V2. It didn't really wash out that well. It's not respected the 10-day moving average. Let's look at the weekly. You know, it's moving sideways. That's good. But of course, we know it's moving sideways on the weekly because it's moving sideways on the daily. So I think I'm just going to pass. And VIX, I would buy this today. I would buy VIX today if we closed above yesterday's close. So that's pretty much the one I'm going to be watching. Oh, did I use the wrong GME? I've done that like twice before, Zach, haven't I? Well, look, I mean, I like this setup. I mean, we're above the 1 ATR channel. Now we're just poking our head back in. I mean, so many times you'll see the price be above the 1 ATR channel, above the value zone. Just wait for that thing to come back into the value zone to buy, right? Instead of buying up here. You can just see it wouldn't have been a good idea, but it is coming into the value zone. So if it could come down a little bit more, have some sideways movement, look for a V1, V2, that'd be excellent, especially with the short positions that you talked about. And as far as how do you find out what short positions, I think on finviz.com, you can look at stocks and you can look a percentage of their short position. Bing He says, Steve, I notice good traders tend to have some feel about the market pulse and do not follow TA blindly. When I took TLT, my signal was not so strong, but the market seems shaky, so better hedge. Oh, that makes sense. GM says, what's going on with SPX? Well, we're kind of at an interesting place on the SPY. I know a long-term trend line, like if we broke the low here, that would be a bad sign. If we broke this low here, that would be a bad sign. But so far, it's still, it's still above trend lines. So, I would say positive. Steve says, trading intuition can come from subconsciously seeing patterns you have seen in the past. Many experienced traders do not develop a feel and know when, or many experienced traders do develop a feel and know when to pass on risk, trade smaller, hedge. Yeah, it's just so true. Sometimes you just have a feel for it and you feel it. Ed Sakota quote rule, number 1, cut losses. Rule number 2, ride winners. Rule number 3, keep bets small. Rule number 4, follow the rules without question. Rule number 5, know when to break the rules. Good stuff. All right, we have 4 minutes. VIX is getting pretty close. Disney is still under the 520 crossover. That hasn't triggered yet, Kamal. Jerry is here. Hey, good to see you, Jerry. So Jerry took CCL. All right. He's going on a cruise. All right, Jerry. This is Jerry's first trade on the board that I can recall. Okay. What do we have? 3 minutes? All right, I better pay attention. Okay. There you go, bud. Good luck with that. I mean, it does have a V2 today. I kind of what just Steve talked about, I wish we had more of a washout. It didn't wash out much, but it is a V2 and it is in the value zone. All right, VIX. Yep, I just looked at VIX and I'm considering taking it if it closes above 44.15. Steve says, I'm holding QLD and Nike, adding Facebook. Oh, all right. All right, I will add that in a second then. And Facebook, 1050 SMA, I imagine. Yep, 1050 SMA is why Steve is taking Facebook. So let me put that over there so I don't forget. Well, I guess I better get this queued up here in case it does close. I don't know if it's going to. Looks like the market just went negative. And how many shares am I supposed to buy? All right. All right, we have 45 seconds. If this closes above 44.15, I will take the trade. So Adobe went negative, Apple went negative, TLT's positive, QLD, let's see. Okay, 44.15 is where I need that baby to close. 15 seconds. Don't know if it's going to get there or not. No, it did not. So I did not take the trade. But I did get the overnight SPY trade, and let's see where we got that at. 279.08. Exactly where it is. Did I buy it at 279.08 yesterday? Did I buy it again at the exact same price I bought it yesterday? Yesterday I bought it at 279.10. All right, so today I got it at 279.08. All right. Well, listen, it was a positive day for me, so I'm definitely happy with that. Mainly thanks to those 2 day trades I had on Apple. And then the overnight SPY trade was up, and then the Adobe trade was down a little bit. But all in all, was positive, so I'm grateful for that. And let's see, where is Steve's 1050? Okay, so Steve bought, man, all these screens. All right, so Steve bought Facebook with the 1050 SMA. This is a SMA trade. So he bought this, well, I don't know exactly where he bought it, but I imagine it's pretty close to the close. All right, Steve Bird's on there. We have earnings coming up here in a week or so. It was up today, so it has good relative strength compared to the rest. And then Jerry added the V2 Carnival. So good luck with that one, guys. And then Steve's keeping the Nike, keeping the QLD. I think Bing He still has the TLT. So if there's any change on that, somebody please let me know. Bing He says, Greg, for Tesla to come back to value zone, it may need to cover the gap on April 14th. Covering the gap is bearish. Yeah, you're right. You are right. I mean, here we gapped up here. We already closed below the low of the gap up day, which is also somewhat bearish. But again, you know, I don't really look at it that way. Yeah, it's bearish, but I just want to get it back into the value zone. Remember, prices go above value, they come back to the value zone. They go under value, they come back to the value zone. And it just, from a high level, you just want to buy at value and sell above value. Most people want to buy above value, in my experience. So, boy, if we could get down here, and who knows, with earnings, anything's possible. We could get down to this 100-day moving average. Listen, I'll get to the rest of your comments, and if you want me to take a look at any other stock symbols, please let me know. I just want to quickly put in my daily plug. Hope that's okay with everybody. Just let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I've been trading for 24 years. I've studied with some really, really great traders, mentors and coaches over the years, like Stephen Burns, our friend Stephen Burns, Dr. Alexander Elder, Kerry Lavorne, Larry Williams. And in my course, which is 5 sessions, each session is 3 hours most of the time. So it's a 15-hour course, and it's one-on-one. It's very interactive, and in that course, I teach you everything I've learned, all the experience I've had in the last 24, everything I've learned from all my coaches that I just mentioned, and I love to teach. I've had good success with my clients, and you know, every student I've had at least has told me that they were really, really glad that they took the course and that it was, you know, worth every penny. But I do think it's worth every penny. I mean, really, the knowledge and the one-on-one that you get with this course, I think you're going to be happy with. And so, if you're interested, please reach out to me. I do like to have a Skype call. It's free Skype call, no obligation whatsoever. I had one last night with Quad Racer. But you know, if you're interested, let me know. Send me an email in the description. Send me a message on Twitter, and we'll set up the Skype call. But I just want to get to know you a little bit better, put a face with the name, and learn more about, you know, your experience and what your goals are and what your challenge has been and what your setup is. And then that's a good time for you to ask me any questions about the course, what it involves, how it works, and then ask me any questions about me personally. That's totally fine. But the format of the course is usually in any one particular session is I teach the first half, and then the second half I have you teach it back to me. Basically, I ask you a lot of questions to make sure you understood what I was teaching you. We do lots of chart study, and here on this live stream, I'm always the one breaking down the charts. Here's the next trade. Here's it's a good risk reward ratio. But during the lessons, you have to do it. You have to break it down. So you really have to think, and you really kind of have to learn it, right, in order to break the chart down. But I'll be like, what's our next trade? To the upside or the downside? Okay, it's the downside. Did we enter? We did. Where's our stop? Where's our profit targets to the upside? What was the position size? Are we scaling out? Right? So it really involves a lot of information, but I think you'll be really happy that you took the course. I've got quite a few students at the moment, but in a week or so, I'll have some openings. So if you're interested and want to have that Skype call with me, please send me an email or message me on Twitter. And then also, if you like today's podcast, if you found it helpful, I really would appreciate it if you could hit the like button before you click out of here, and share it on social media or something like that, or tell a friend about the channel. So anyway, let's take a look. Sanjiv says, are you looking for long or short on VIX? I was looking for long, but it did not trigger. Glenn, hey Glenn, good to see you, buddy. Looks like shooting star on S&P 500. Bears need to close below 2736. Yeah, that 2700 level is kind of an interesting level on the SPX. Let's see. Yeah. Breaking down below this. Oh, Bob took Twitter. Interesting. All right. Well, we got Bob on the board then. First time, Bob, I think. Could be wrong. Let's see. Twitter. Oops. All right. Third time is a charm. Okay. Yep. So we did have the 520 crossover. If you would have taken it yesterday, you would have got a more expensive price. So I don't see any problem with that. You are under the 520 and you got a little bit of a discount on the price. So congratulations, Bob, 2789. Bob M. All right, so you're on the board, my friend. Just make sure you have a plan with that trade, right? Where you're getting out to the upside, where you're getting it down on the downside. Zach says, I started doing this last month. It's been a very interesting experience. I got stupid lucky not knowing what I was doing last month. Now it's actually much harder when applying what I learned. Isn't that true? Isn't that true? Sometimes it's better to be lucky than good, right? Kamal says, thank you, Greg. You're welcome, Kamal. Thank you, sir. I look forward to our next Skype call. Glenn says, Facebook gap at 2208 is something at Steve Burns could get with a 10% return. Oh, over here. Yep, that'd be good. Just have to get above that 200, but who knows? It could. It really might with earnings, but who knows? So earnings are on the 29th. All right. Marcelo, hi, how you doing? Marcella, thank you for coming. Marcella says, I begin to listen to you since Dave Lincoln interview. I will follow you before calling. Thank you, Greg. Oh, thank you. And thank you for listening to that interview with Dave. Dave's a good friend of mine, and I love Dave, man. Dave is one of a kind, and I love his podcast, Famous Dave's, on YouTube. And, he really has a great niche, which is the VIX, and he specializes in the VIX. But But thank you, Marcella. It's nice for you to come, and thanks for visiting and for saying hello. If there's anything I can help you with, please let me know. Bing He says, Facebook earning 429. Yep. Miko, Greg, thanks, Greg. Talk to you later. Yes, Miko and I have a lesson tonight, so I'm always excited for lessons. Very nice doggy. Ah, thank you. That is my girl, Katie. That's my German Shepherd, Katie girl. She's over there sleeping right now. Glenn says, first time bad employment figures did not goose the market higher. Does that mean bad news is no longer good for the market? Yeah, that's an interesting point, Glenn. Sometimes bad news is good for the market. Sometimes good news is bad for the market. But that's a really good observation, Glenn. You know, generally bad news means that there's going to be more financial stimulus or some help from the Fed, and you know, very well could be baked in the cake, right? Kamal says Twitter does not test well for the 520 EMA crossover. Yep, I did notice that. Marcella says Dave is great. Yes, he is. Jesse says USO is doing a 1-to-8 reverse split end of day on 428 to stay afloat. Not a good sign for the fund. Wouldn't go anywhere near that ETF. Seems like super contango going on. Punish, collapse it. It is down 80%. Yeah, USO has been doing very, very poorly. What was the other ETF that did a reverse split? It was XLE, I think. Yeah, they did it like a 10-to-1 reverse split because this got down into the pennies, but it has rallied. You know, that's a tough one, man. I've heard lots of arguments for and against oil and so forth. I mean, most people, if they really just want to trade oil, they're going to trade futures. But, you know, if you're a retail trader and you don't trade futures, then USO is about all you have. Was up 5% today, but is pretty scary. Bob says, until now, Kamal. That's right, Bob. Bastian says, thank you for today. See you tomorrow. Thank you, Bastian. Really nice to see you as always. And I'm glad Marco invited you. Marcella says, UCO, Nugget made reverse splits as well. Yeah, when they get down low enough, they do reverse splits. It's going to be interesting to see what happens with oil. I mean, I imagine eventually the demand will come back. But right now, it's just a tough situation with, you know, the storage of the oil. And Jesse's right. The contango is super, super high, especially the way USO's doing it because they're buying way out. They're not buying the front month. They're buying months and months out. Jesse says USL seems a safer option as spreads through the contract rolls over 12 months instead of 2 like USO. Oh. That's interesting. That's a good point. That's a good point. Similar chart patterns, but that's a good point. Jesse, have you had any trades lately, sir? We need to do a Skype call and catch up. I know you've had a busy few months going on. I'd like to catch up with you and see what's happening. Look at VIX up 46 cents after hours. I'll tell you what, man. You know, I was talking to one of my students last night, and there's always going to be a disappointment in trading. Whether you follow your rules or whether you break your rules, there's always going to be some kind of disappointment. Here, I followed my rules, and I didn't get in, and now it's up 1%. I mean, it doesn't mean it's going to be up tomorrow, but you know what I've said. I missed a trade on Carnival Cruise. It went up 20%. I missed it just because it closed at like $29.99 instead of closing above 30. But on the other hand, I was looking for a trade on USO under 30 over 30, and it closed below 30. So I didn't take it, and the next day it fell 30%. So it worked out for me there. But sometimes you're going to break your rules, take the trade, and it's going to go against you, and you're just going to be all distraught. Why did I break my rules? And there's other times where, like on VXX, my rules told me not to buy it, and if it goes cruising up tomorrow, I'll be like, dang it. But you're also going to get some good trades in there as well. You can't get everything. Ooh, SPY's down quite a bit. Apple's down. Qs are down. Did we have some earnings? Anybody? Man, this live stream's great. You guys are like Twitter. All I have to do is read the live chat and I know what's going on. Frank says, I just read there are still tankers of Saudi oil coming in with no storage space. Yeah, I heard that as well. I also heard some talk about not letting them in, but I'm not really sure. I just feel like that's what the headline says. Jesse says, I'm up for a call whenever it works for you, sir. It would be nice to catch up. Yes, it would. Yes, it would. I'm always so impressed with Jesse, man. Seriously. Good guys out there helping the community, serving his country, all that stuff. Glenn says, Intel is down 5% after hours. Oh, thank you, Glenn. Like I said, this is like Twitter. I could just look here and I know what's happening. Intel disappoints. I would imagine. Boom, boom, boom. Ooh, yeah. Down $3.30. Well, I am pretty light at the moment. Adobe calls on Apple and the overnight SPY trade. That's all I have. And I'm really grateful that I've had some really good day trades lately. I mean, I haven't had a lot of current positions just because of where we are in the charts and the extended levels. So lately I have had to go intraday to look for some setups. And thankfully, they have been good. Intel has low second quarter guidance. This should not be a surprise, I imagine. Frank says reverse splits are a bad sign. Yeah, they always are. They always are. Frank, what's your opinion on oil? What do you think oil's going to do? You think oil's going to stay down for years? You think it's going to go up? Do you have an opinion on that, Frank? There's a meme going around on Facebook and Twitter about, everybody trying to figure out how to make money on oil. It's a tough one. It's a tough one, especially when you're dealing with contango with those ETFs. Sometimes it's nice to take a breather and not talk for 5 or 10 seconds, and I kind of zone off. I'm like, oh wait, I'm live. Let's get it together. I need commercials. I need like 3 commercial breaks during this podcast for like a minute. That would be perfect. You guys want to advertise on here, and just advertise whatever you have, and I'll give you I'll give you for $1. $1 you can have a minute. Bob says earnings tomorrow, AM, AXP, and AAL. Okay. What is AXP? Is it American Express? Yeah. And AAL is American Airlines. I believe it's American Airlines, right? Yeah. Frank says, what can I say? Too much oil and no demand. Yeah, for sure. For sure. I'm just wondering what your opinion is going out a year or so. Is the demand going to come back? Are the cuts going to make a difference? Glenn says WTIC has a gap at $40. It should be filled. Yeah, $40 is about the price that oil needs to be at to kind of make everything run. You know, the issue is with this cheap oil, the banks have so much exposure on debt to these oil companies that, you know, they can't take it out of the ground. It costs more to take out of the ground at these prices. So that, you know, it's good for consumers, but we can't drive right now. But on the other hand, it's really, really bad for the oil companies and really bad for the banks because of their debt. I really thought Amazon earnings were today. I should pay more attention. I was relying on my charts, but it's always exciting when Amazon has earnings that come out, isn't it? All right, everybody. Well, listen, it quit raining, so I'm glad. So I can actually go out and walk Katie. She would not be happy with me if I did not walk her. So going to put the hiking boots on and going to go for a hike, maybe listen to a podcast or something, not sure, get some fresh air, come back, grab something to eat, and then I have a lesson tonight with Miko. So looking forward to that. Always like spending time with, I always look forward to every lesson, like I really do. So again, you know, if you're interested, contact me. We'll set up that Skype call, and if it works out and it seems like a fit for both people, you know, we'll go ahead and schedule that in the next week or so. So if you're interested, please let me know. But before I let you go, please go out and do something nice for somebody today, just a smile or a wave, or give somebody a call. Just check on them. I'm sure they'll appreciate it to know that someone's thinking about them. But let's try to do something nice every day for someone, right? It's a good policy. And maybe one day you'll need it. Somebody will do it for you. So thank you all for coming. I appreciate it. I hope you have a good rest of your day. Be safe, be good, and have a good night. And hopefully I'll see you tomorrow during the last hour of the market. And all right, sounds good. Thanks, Jesse. Thanks, Greg. Have a great evening. Stay safe. You too, my friend. Be safe out there. And thank you all for coming. Hope to see you tomorrow. Bye. U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind, which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.